Going to begin the afternoon sessions with a panel discussion called The Golden Age of Fake News. And I'm going to begin by introducing our moderator. In my opinion, she's the best broadcast journalist in the gold sector and the face of Kitco News. Ladies and gentlemen, please welcome Daniela Camboni.
Hi, everyone. Thank you so much for joining us this afternoon. And Jay, thank you so much for that very nice introduction. We have a great panel for you today. We're going to be talking real facts versus fake news. I know as investors, we have a lot of information thrown at us, and sometimes it's hard to decipher what's real, what's not when it comes to gold prices and picking the right mining stocks. So we have an all-star panel for you today. We have Brent Cook, famed geologist, founder of Exploration Insights. I know Brent for a long time. He was one of the first people I ever interviewed 9 years ago on Kitco News. So Brent, thanks for joining us today. We have Ivan Bebek, chairman of Auryn Resources. Ivan, welcome back. And E.B. Tucker, editor over at KC Research. He works closely with Doug Casey. And in my opinion, he's one of the brightest talents to break through into our space lately. So welcome, everyone.
Thank you.
It's a very interesting week for metal prices. We're going to start by looking at gold falling below key support of 1,300 this week. Some would say that gold is in a bad place right now, that investors are disinterested in the metal. So is this fake news or real? Ivan?
Okay, fair enough. Good question.
How's that for the dramatic intro?
Well done. You know, as far as the gold market in general being in a bad place right now, I'm going to call that fake news. And I'm going to say this for a few reasons. Number one, assets are cheaper than they've ever been in terms of a company to go and acquire them. People to go find the gold mines are available to go find those. If we were at $1,700 gold right now and our share price was $7 a share, not $1.70 a share Canadian, and you asked me with the same stuff that's going on where we're now, are we a buy at $7? I'd have a real hard time saying yes, because we'd be inflated well beyond our price. So for me, the deep discount in our company and the opportunity to acquire real assets and real people makes this the best shopping place to be ever. And as an investor, it's the easiest market to ever buy into because you're buying such a deep discounted market that's so super for sale. So it's very easy to buy into this market because everything is obviously cheap. So that's my thing there.
EB, you had told me not too long ago you want a gold rally, you're going to get one. And you're nodding, you're still sticking to that?
You will get one. Yeah, I think gold looks a lot better than people think it looks. I mean, it's flat for the year. The S&P is flat for the year. I'd much rather own ounces of gold than shares in the S&P. The S&P is heavily tech weighted at the moment. I think that's going to change. As those rotations happen, there can be a lot of turmoil. With gold, gold's an asset. There's no counterparty. And the thing people don't understand is that you can't use emotion in making decisions with your money. You've got to think strategically. You've got to buy things when no one wants them. And then when everyone wants something, you sell it to them. Everything has a price. No one wants gold right now. It's a perfect time to buy gold.
How do you see it, Brent?
I would sort of disagree. I think it's in a rather bad spot right now. I don't see the U.S. economy, the global economy is doing fairly well. Rates are rising. So I don't see a lot of positive events that are going to bring the gold price up. Accepting, I think there's probably in the order of a 25% chance that Trump tweets out something that really rocks the gold price. Not something I want to see, but I think that's what you've got to keep in mind. However, in terms of investing in this sector, particularly the junior sector, I agree. It's a good time to be looking at these things, and you can buy quality for the most part at a reasonable price, if not a discount, if you're willing to go down the food chain and look at the early stage exploration projects, which is where the major mining companies are looking right now.
Well, for Ivan and Evie, who are more optimistic, how are your personal portfolios doing if you're so bullish gold the gold price here?
My portfolio is gold heavily weighted, meaning gold stocks and whatnot. It's obviously diversified because I'm not one-way thinking, but it's a long-term portfolio. You know, its largest position is my own company, which I don't sell a share until we sell the company. So for me, I'm really immune to the short-term volatility in my portfolio, but I'm really happy as a long-term investor because I don't feel it can get much lower, and I think that I only have upside to look forward to.
Look, I like gold royalties, silver royalties. I like the royalty business model because you get a percentage of what's mined. I couldn't find the type of royalty company that I wanted, so I started one. I'm a major shareholder there. We're up 25% this year. We pay a dividend. So people talk about the terrible market. I have to look outside of my portfolio to see the terrible market.
All right. Brett, do you think that mainstream media gets gold? Because a lot of people would say they hate gold.
No, I don't think mainstream media gets gold.
And of course, not Kitco News is included.
No,
in this,
Kitco is the place to go for news on gold, for sure.
Thank you for that plug, Brent.
No, I don't think the mainstream media gets it or even cares about gold. It's a very minor sector, except up here in Canada and Australia, maybe. But on the whole, it's just not covered. And you see that there's very, very, very little institutional money coming into this sector, which, again, points to what EB's getting at here, is that this stuff, in certain instances, is very cheap. So no, they don't get it.
Ivan, you were smiling with that point.
No, it's you know, my homepage is Kitco as well, but you know what? I think I'll add one layer there, and I've been a big buyer of the gold market. You know, our companies as well as others, and I think if you think of your portfolio, there's two exciting times: when you buy something and when you sell something. The time that's toughest for me as an investor is in between those two transactions of buying or selling, because you generally don't know what to do or you're waiting for things to happen. So being a buyer right now, it's an exciting time. And does the gold market, is it properly understood? I certainly don't think so right now.
I meet a lot of investors who sometimes just don't know when to let go. You know, when just to say goodbye to that stock. So when should you part ways and break up? How do you know when it's time to let go, Brett?
That's a really good question. That is the hardest thing.
Breaking up is hard to do.
You gonna sing?
No, I'll save you guys that.
But I mean, there's a chart you've all seen where the typical exploration story, it rises, then it finally falls, and then it might go back up or not. It rises because of good results. It falls because there's a fatal flaw. Really, the majority of exploration projects are going to fail. We know that. So Joe Mazumdar and myself, in our letter, we're always looking for the fatal flaw. And we've made as much money, if not more, on stocks that ultimately failed because we saw some results that were encouraging. We bought the stock, we followed it up, but eventually something came in that told us this isn't going to work, be it metallurgy, be it size, be it grade. And so you really do have to follow these things in this sort of market, because your competition is the major mining companies, and that's who you want to sell to. So I think it's critical. And I'd like to say, you know, it's easy to do, but it's not. I think you need good advice, either a broker or a brother or a newsletter writer, someone who you trust that can interpret this sort of thing. You know, you're a brain surgeon, you know nothing about mining.
Just a brief point there, pick your prices. If you buy something at $1 and you say, I'd be happy selling this at $5, sell it at $5. Don't sit there changing your targets all the time unless you keep a small portion of it. Hochschild made all his money selling early. He never made $1 selling late, right? So yeah, I might not guess the market right, but if I get 5 times my money and I don't take 60 or 70% of my money off the table, shame on me, I'm holding it too long.
Okay, so basically, like Warren Buffett says, don't get too greedy, right?
Hard when you're dealing with gold, but yes. We try.
Yeah, well, look, years ago, I decided as an investor I had to come up with a system if I was going to survive in this market, and so I came up with a system of the way I make an investment, and it's a size. There's a range. So I have a range that I'll do in any deal, and I'll sell at certain times, and I stick with that. Otherwise, I hear one story and I think, well, this has got to work, you know. And we've all heard these stories, and sometimes they do work, but a lot of times they don't. So I don't have a bunch of deals that are one size and then one tremendous deal, you know, and so and this isn't things that I'm not involved in, right? So, but to Brent's point, you got to keep your head on straight, and it's hard to do that. So come up with some rules, and then evaluate as things go on, and keep notes, and sell out at the proper time, and don't be afraid to take your cost off the table.
One thing I've learned the hard way is you go into an investment company with a thesis that this is going to be a porphyry copper deposit, and they need to do this, and it doesn't work, and your investment thesis changes from knowing what you're doing to hope. Once your investment thesis turns to hope, you've lost. And I've gotten to be real critical. If something doesn't work, I'm gone. I don't care if I win, lose, I'm out of there. You got to cut your losses real quick in these things.